Hi, this is Neil back again. You got me and you've made it to the second week. Congratulations. Of course, we are still in the introductory phases of getting into this fraud course, and let's go over the learning objectives for this week. And really, the big question is why people commit fraud. Yes, you've got that question. So there are some of these learning objectives that are more important than others. Let me go through them and point them out to you. We will have a better understanding of the types of people who commit fraud, understand why people commit fraud, but essentially most of this week we're looking at the fraud triangle. That is the opportunity, the rationalization, and the pressure to commit fraud. And I want to teach you about the fraud scale, which is a derivation of the fraud triangle. We're going to understand how pressure contributes to fraud, opportunity must be present for fraud to take place, and also why people rationalize. And if we've got time at the end, we will look at how people are recruited to participate in fraud. So let's get into this exciting unit. Finally, who commits fraud? Well, we could say that, like, if we take the total population of people around the world, the 10 world, 10% of people will never commit fraud. 80% of people may commit fraud if the opportunity is there to do so. And 10% of people will look to commit fraud in every type of situation. So there's many generic observations or predictions about what percentages of population are out there will commit fraud. But let's have a look at some data, shall we? And that is data from the Association of Fraud Examiners. And we'll be referring a lot to their material this semester. Why? Because they're the largest body in the world that if you want to become a fraud examiner, they are the blue ribbon association that you want to become associated with. You want to become a member and you want to pass their exams and be qualified with them. And then you can actually practice anything in the fraud area. So every year they create this database of occupational fraud around the world. And it's called a report to the nations. Since 1996 they have compiled over 20,000 cases of fraud. And I just want to give you two snapshots, 2014, 2024. Above me, we have 2014, the average of the perpetrators of the cases that they reported on. We're talking about over 1,400 occupational fraudsters. 42% were staff level employees, 55% worked alone, 52% were between the ages of 31 and 45, 2/3 were male, 46% worked for the victim organisation, 72% had at least some university education. So watch out, all of you are going to have a university education, so you might fall into that 72% in the future. Who knows? Okay, 45% worked in the accounting, primary operations, sales functions in the victim organisation. 87% were the first-time offenders and 47% were known to be living beyond their means. All right, so is that any different 10 years later? If we look at 2024, and you can study this in more detail on the slide, but I just note that 46% worked alone compared to 55% 10 years ago. 69% were between the ages of 31 and 50 compared to 52% between 31 and 45 10 years ago. 74% were male compared to 66% 10 years ago. You can see that little differences over 10 years. 68% worked for the victim organisation compared to 47% 10 years ago. And you can see 38% worked in the accounting, primary operations and sales functions of the victim organisation. So there you have it. All right. So we have this snapshot taking place every year, and we want to refer to this from week to week because it gives us a good idea about what is going on out there and not just looking at the theory from week to week. So getting back to theory, well, chapter 2, here's the fraud triangle, and it's a derivation of the fire triangle. Any of you who were training to become a fire brigade employee, fight fires, you would know that for a fire to take place, you need heat, you need oxygen, you need fuel. Same thing with fraud. For the perfect fraud to take place, you need pressure, rationalization, and perceived opportunity. Now, out of these three, I would say that most of the evidence or most of the focus of organizations has been trying to address and minimize the perceived opportunity. And less emphasis has been placed on the pressures on employees or fraudsters or the psychology of how they rationalize. And so keep that in mind as we go through this, because it may be in the future, organizations need to put greater efforts into dealing with the pressures that employees are under, and also to understand their employees better in terms of how they rationalize their behavior in the organization. So let's get into this fraud triangle. Fraud scale, that's a derivation of that. And basically, it's where you put the three pieces together, whether the scale would tip towards high fraud or low fraud. So if you had situational pressures, opportunities to commit, and the integrity was low, then the scale will go this way to high fraud. If this was low, low, and high, then the scale will go to this end. All right. So it's just a way of depicting how the fraud triangle, the three parts, work together. Wow. All right. So let's have a look at the element of pressure. There are financial pressures, vice pressures, work-related pressures, and other pressures. And look at each of these in turn. Now, of course, financial pressures are very big because for the individual, it's obviously their greed or living beyond their own need, or they have poor credit, they had personal financial losses. Maybe we talk about vices later on, where you can, through gambling, they incur lots of debt, and then that affects their financial pressures. So vice is related to financial. But from the organization point of view, and we're talking about management fraud like Enron, like WorldCom, like Sunbeam, where management defrauded investors by misrepresenting the financial accounts, then management fraud normally occurs when management, they're under the same poor cash position, or they see that their company is going to miss earnings estimates, or the share price might take a nosedive because they know that analysts are expecting a certain earnings number and they're only going to meet this lower number. Or they might break their loan covenants, whereby the creditors will actually take them to bankruptcy. These are all pressures that could force management to manipulate the financial numbers. So then you have pressures for employees over there, you have pressures for management, employees against the organization, and pressures for management to commit fraud on behalf of the organization. All right. So what about vice and work-related pressures? I mentioned vice briefly, but that's associated with gambling, drugs, alcohol, expensive extramarital relationships. All right. These are all pressures that put financial pressure on the employee and maybe on management, indirectly. Then there are work-related pressures. Some people commit fraud to get even with their employer or others. They may hate their employer for how they are being treated. There may be motivating factors like getting little recognition for their job performance, or a feeling of job dissatisfaction, or fear of losing one's job, or being overlooked for promotion, or feeling underpaid. You and I know you've been in a work situation, I'm sure. It's never perfect on all occasions. There's always times when you feel, this is unfair, this is not fair. Well, for some people, they don't have the psychological or the mental resilience to deal with these pressures like others. And then they become work-related pressures to do something against the organization. Wow. All right. So what about the element of opportunity? As I said, this is the biggest area that organizations tend to focus on. But like we just said in the previous slide, the organizations need to increasingly, especially when you hear about this mental health concerns being talked about daily in today's society, organizations need to think a little bit more about the pressures that workers are under that may lead to them taking acts against the organization. Okay, put that aside. Let's have a look at the element of opportunity, all right? And there are at least 6 major factors that increase perceived or real opportunities for individuals to commit fraud within the organization. They are lack of internal controls, the lack of audit trail, the inability to judge the quality of performance, the lack of access to information or asymmetrical information, failure to discipline fraud perpetrators, ignorance, apathy, and incapacity. Let's look at these one at a time. And these are real opportunities that people will take advantage of if organizations are weak in any area. All right. So what I've done, and this is in the textbook, they've actually talked about all this, but I've put it into 3 areas. Basically, there's the control environment, and that is the management's role and example, management's communication, their effective hiring procedures. Okay. There are control activities, and that's all about it's the 5 control activities: the separation of duties, the authorizations, the physical controls, independent checks, documents and records. And then you've got the accounting system. Yippee! All right. You're studying a major in accounting. For those that are, your skills are in demand thanks to the fact that people still like to commit fraud out there. So organizations need the accountants more than ever. Don't listen to the trends around the world of accountants not being in demand. They are in different ways. Okay. All right. So accounting systems very important, control activities are very important, and the control environment. And all of these, if you are strong in these 3 areas, then you as an organization are likely to prevent most instances of fraud. Okay, so that's the control system in a nutshell. This is the minimum that an organization should do and can do, right? The right environment, the accounting system in place, and these 5 important control activities. They call it SAPID, all right? Separation of duties, authorizations, physical controls, independent checks, documents, and records. Now I want to look at other things that organizations need to pay attention to control the opportunities for fraud. The first of these is having a proper audit trail. Organizations go to great lengths to create documents that will provide an audit trail so transactions can be reconstructed and understood. Many frauds, however, involve cash payments or the manipulation of records that cannot be followed. So for those that want to commit fraud, they understand that, yes, there is the act of stealing money, but also you need to do 2 other things. You need to conceal the theft, and then finally you need to convert. We'll talk about that in future chapters. That is the act of theft, concealment, and conversion. All right. So if you have a proper audit trail, it is more difficult for the fraudsters to conceal the act of theft. All right. So let's go on to the next idea about opportunities for fraud. The inability to judge the quality of performance. And the best example I can give you is my little friend up here, and you know who he is. He is a car mechanic. And how many of you take your cars to the mechanic and they tell you, yes, we changed the oil, we serviced the motor as you asked, but we also found that the brakes were faulty, so we had to change the brake pad. Or one of your suspensions was loose and faulty, so we had to put a new shock absorber in. And who are you with your limited expertise of the knowledge of your car to question what the mechanic is telling you and what they did? So this is what we really mean by the inability to judge the quality of performance. Very much like an information asymmetric situation where someone has more information than you. Now, if you have a close look at this diagram above, notice that some of the language is not in English, and that is exactly the problem. The mechanics can talk in a language and understand with their technical knowledge stuff that you, the average motorist, does not know. So watch out for your mechanic pulling the wool over your eyes. So that's the first area of opportunity that organizations must address. And there's a beautiful case study that happened with the Sears automobile dealerships in the US, where you bring your car in, and part of their checks was they had to drive the car for 1 or 2 kilometers after the service. Well, instead of doing that, they put the car on a jack and then turned the motor on and then rolled the wheels around for those 2 kilometers to save time. And the odometer went up 2 kilometers, but you were none the wiser, and you didn't know if they did a proper check on the car after they had serviced it. So there's a big case study about that. So this idea of the mechanic knowing more than you is a real situation. It has happened in this world. Related to that is the lack of access to information or asymmetrical information. The same idea, but now we're talking about management fraud. Before, it was the mechanic fraudulently behaving and ripping you off as the consumer. Here, we have the management ripping off the shareholder. That is, they're committing the fraud on behalf of the organization. And then we have Kenneth Lay, Jeffrey Skilling, and we know Andrew Fastow, the perpetrators of the giant Enron fraud, one of the biggest in the past century to ever occur. They went downhill in a very quick fashion, 2001, 2002. Arthur Andersen got caught up in this because they happened to shred lots of documents around the audit. Story for another time. But this is a classic example of a case of asymmetrical information, where one party has information about products or situations that the other party does not. And this is a key example of a management fraud, where they know more, they're able to manipulate the financial books and try to pull the wool over the eyes of the shareholders, of the analysts, of the creditors. It worked for 1 or 2 years, but then the reality came home to roost in 2000, 2001, and look at the share price, all right, from over $90 down to zero in no time at all. Exciting, all right? So what's the big idea here? Weak visibility creates opportunity. Wow, all right. What's another area of opportunity? Failure to discipline fraud perpetrators. And this is a real problem in today's society, when you have an employee and he did his till. Maybe he steals $100, $200, and you give him a warning. Maybe he steals a little bit more, then you fire him. And in order not to tarnish your reputation, your brand, or to give a negative signal to your customers for how customers are being treated by your loyal employees, you do not tell anyone. You do not inform the police, and you let that person go. Maybe a non-disclosure agreement where they're not allowed to say anything, and they go and work for someone else, and they commit a larger fraud. And this is exactly what happened here with John Doe, where the first job, he embezzled $200. He was let go and they didn't tell the police. Second job, he was there for 2 years. He stole $1,000. Third job, bookkeeper, 1 year, $30,000. He was let go, went to another job as an accountant. Not the accountants again. I'm training you to be accountants. All right. Okay. He was an accountant for 2 years. He was a bad accountant. I'm sure you're not going to be like this. All right. For 2 years, and then $20,000 embezzled. Then he was fired. He went to another company for 2 years, $30,000. And then 6 years, controller, CFO, 6 years, over $1 million in fraud. And then he was let go. They still didn't tell the police. They still didn't prosecute him. And he turned out to be a manager, and he was still employed somewhere else. This is what happens when you fail to terminate. Weak penalties and discipline provides an opportunity for fraudsters to take advantage of the organization. Finally, weak knowledge provides an opportunity. What do I mean? Ignorance, apathy, incapacity. We hear about this every day now in the news, where scammers have tricked elderly people, or people that are none the wiser, or they haven't got a full education, and they're the vulnerable people. And perpetrators know that such individuals may not have the capacity or the knowledge to detect their illegal acts. For example, what above me here is a Nigerian scam letter. All of you have received an email from African, something like this, saying, if you give us your bank account details, your phone numbers, your addresses, and other information, we will send you some money. We'll get you to share in this distribution of $20 million. That's ripe for the taking. But you must act fast, all right? Now, you and I might know, oh, okay, this is a scam, but not everyone knows that. And there's millions of people around the world, and it only takes one or two of these to be tricked, and these scamsters get their money. You understand what I'm saying? So it's a small numbers issue that they're trying to take advantage of. They don't need the majority of the population to be sucked in. They just need 1 in 1,000 because they're sending out literally tens of thousands of these emails. And then there's consumer fraud such as prime bank fraud, pyramid scams, internet fraud, phone scams, chain letters. We'll talk about these as we go on, but there are so many frauds out there that take advantage of the weak knowledge of people in society. The element of rationalization, all right? Remember, I was just talking about opportunity. We talked about pressure. We talked about opportunity. And now we want to talk about the element of rationalization. And that's what I mean is after you've committed the fraud or in the process of committing the fraud or perceiving and justifying why I should commit the fraud, I'm saying this to myself. I'm only borrowing the money and I'll pay it back. No one will be hurt. I deserve more. It's only a small amount. This organization's making millions of dollars. I'm just stealing 1,000. It's for a good purpose. We'll fix the books as soon as we get over this financial difficulty. Something has to be sacrificed, my integrity or my reputation. All right. So, the last two may be associated with management fraud, what they need to do to try and meet their targets, meet investor concerns, meet debt covenants. All right. But you can hear this going over in your mind if you're a fraudster in the process of getting the motivation to commit the act, in the process of during the act, and in the process after the act. And that's the element of rationalization. And if you're not saying these things to yourself, you're going to have huge cognitive dissonance, and which would force you to say, I did it. I'm sorry, I committed a fraud. I'm guilty. All right. I just want to get out of this. I can't sleep at night. Enough is enough. I just want to be a normal person again. All right. All right. So, and rationalization is a huge mental trick that people play on their minds in order to deal with the mental anguish that they're doing with the fraud. So there you have it. The example I just talked about, the person that started $200 went to $1,000, $30,000. That same example could be associated with rationalization. Like, I just steal $10. All right, I just need it. It won't be missing. It's just a little amount. And then you think a week later, oh, if I can do 10, let me try 100. And you steal 100. Oh, it's working. And then it gets larger. You get another 100, then another 100, and then another 100. Suddenly, 50 weeks later, you have stolen $5,000. And it just grows over time. And because you're rationalizing, you started small and just a little bit, little bit, a little bit, a little bit in the same way. And then maybe you move to another organization and say, well, oh no, why don't I just start with a 1,000? So you're rationalizing again. Okay. So it's not just an opportunity thing. There's a rationalization thing that occurs at the same time. So there are a lot of moving parts going around in the fraudster's mind, in the signals given by the opportunity provided by the organization, and the organization signals saying, oh, if you get caught, we're just going to fire you, or if you get caught, we're just not going to promote you. We're not going to say anything. We will sweep it under the rug. We'll keep it quiet. We're not going to prosecute you and send you to jail. And that sends a signal to other people who may be thinking about, well, if he can get away with it, so can I. All right. So you imagine how the opportunity is tied up with rationalization. These things are not independent. And so this is what I want you to keep in mind as you're thinking about these three elements of the fraud triangle, right? Rationalization, the opportunity, and the pressure to commit fraud. Wow. All right. And so finally, very quickly, let's get out of this video as soon as possible, right? You've had enough of me for this week. Fraud recruitment, majority of the frauds, especially the financial statement frauds, are collusive, meaning that they require more than two people. So for example, we go back to the reducing the opportunity to commit fraud, we may have separation of duties, or we may have authority procedures where two people must sign off on any payments greater than $1,000, any disbursements greater than $100 or $500. So you get two people or you get three people to sign off. And so in order to commit the fraud, then you need to collude with the other person that's signing off with you. In some cases, one person, after he or she has become involved because of the fraud, influences another individual to participate. And sometimes power is used in different ways to recruit people to participate in fraud. Now, we won't go into too much detail in this week on the power, but just for the purpose of the textbook, they just talk about the different types of power: reward, coercive, expert, legitimate, referent power. These are all different ways in which you may be influenced by other people to join a fraud opportunity. And so it's for you to be aware. It's for you, if you're in charge of the organization, to be aware that when you do fraud training, and I must say, fraud training does help organizations reduce the incidence of fraud. When you undertake fraud training, be aware that you need to make people aware of the collusive nature of fraud, and it's not just an individual act of fraud. And this is where these notions of power come into being. But let's just stop there, because the main thing for this week is that fraud triangle, all right? You got the pressure, you got the opportunity brought on by the organization, and finally you got the rationalization, that mental side, that psychology that is always going on in your mind about why you should do it, why you shouldn't do it, and why it's worthwhile doing, and why it's just a small thing that you are doing, and all these different mental gymnastics that go on. All right, the pressure, the opportunity, and rationalization. When these three things are present, then you've got the surefire situation of a fraud. So be careful, look out for fraud around you. I will see you in the class and see you next week. Bye for now.